Welcome to the ultimate first home buyer's guide for Australia. In this video, I'm going to walk you through every step, starting from where you are right now, probably renting, all the way to holding the keys to your own home. My goal in this video is to cut out all the confusion and show you that buying your first home doesn't have to be a roller coaster of stress, anxiety, and endless mortgage talk. Because here's the thing, the more you know about the process, the more money you can save, the more fun you'll have along the way, and the easier it becomes to confidently place a bid on the right property so you can move in with as little drama as possible. For the information in this video to apply, we're assuming you're either a high income earner with a decent deposit or a couple with a strong joint income. As for the home, we're also assuming you're not buying in the prime area costing millions of dollars, but rather aiming for around 500 to 800,000 range. This helps keep the information relevant and practical. If you don't fall into this category, you can always check out my other video that explains how you can enter into the market with a lower income. If you ever get lost throughout the whole journey, please favorite this video so you can go back and watch it. And also, if you have any friends or family members that are looking to buy a home and need some help, please share them this video. So why does this all matter? Well, buying your first home is likely the biggest financial decision you will ever make in your life. This is because you're buying hundreds of thousands of dollars for this transaction. Therefore, it's crucial to have a solid blueprint to follow. So from the very start, you know exactly how much you want to spend, what fees to expect, and what incentives you can use to help you buy a property. That way, you avoid feeling trapped or pressured into deals that don't suit you, and you stay in control of the whole process instead of letting the process control you. And that's exactly why we're starting with step 1, planning your money. Once you set up your budget and understand your options, you'll have the confidence to pick up the right property, handle the paperwork, and eventually move in, all without losing your mind. So let's dive into it. Alright, let's jump into step 1, which is planning your money. Because if you don't have a clear plan for covering all the costs, you're going to feel like you're just being tossed around at the mercy of the lenders and agents and properties that might not actually suit you. In other words, you end up losing control of the process, and that's where you feel all this anxiety and frustration that can creep in. So how do we avoid this? Well, it's simple. Figure out your budget ahead of time. Let's break it down. What do you want to spend? Often people walk into this with no idea of what they really want to pay per month. They just let someone else pick the number. But remember, only you can decide what you're comfortable with. A lender might approve you for more than what you actually want. And that's how you become house poor, where your home loan eats up almost your entire paycheck, leaving you with little money to enjoy life. Now, for your monthly payments, a popular rule of thumb is to keep your mortgage, the principal, interest rates, insurance, and any body corporate fees at around a maximum of 30% of your gross monthly pay. For instance, if your total gross income is $12,000, you aim for a maximum mortgage of around $3,600 per month. Adjust this up and down based on what you feel comfortable with. Also remember to consider the utilities and maintenance. These are the real costs that you shouldn't ignore. Now, the upfront costs. So in Australia, usually you need around 10 to 20% deposit to avoid lender's mortgage insurance. However, certain government or private schemes can lower this to 5% or even 2% with no lender's mortgage insurance for first home buyers. For example, a $500K property, you might only need a 5% deposit or $25,000 for a first time buyer. The second upfront cost is stamp duty, typically between 4 to 5.5% of the property value. Look for the first home buyer concessions or exemptions where you might not pay any stamp duty at all. The third cost is conveyancing and legal. So budget around $1,000 to $2,000 for this cost. You also have building and pest inspection reports, which can run between $400 to $600. And also miscellaneous fees such as loan application, valuations, which usually can cost around $1,000. There's also lender's mortgage insurance, which if you save 20%, you don't need that. But if your deposit is smaller than 20%, the lender's mortgage insurance can be between 1 to 3% of your loan amount. Some scenarios let you capitalize it into the loan total, meaning you don't have to pay upfront. But there are government schemes allowing first home buyers to skip the LMI with only a 5% deposit. Out-of-pocket expenses. So these are considered home and content insurance. If you have a mortgage, building insurance is compulsory and premiums can vary between states. So you should budget for between $1,000 a year for building insurance and around $500 for content insurance. Another fee you have to consider is moving charges. This varies between how much you own and the distance you're moving, but costs can range between $500 to $3,500. So get at least 3 quotes to find a good deal. Now, those were all the costs involved. Let's talk about the grants and schemes available for first home buyers. So the first one is the first home buyer scheme, which offers between $10,000 to $50,000, depending on which state for first home buyers. The second great scheme that I like to use for a lot of my customers is the First Home Super Scheme, which allows you to boost your deposit by using your extra super contributions. The third scheme, which is the most popular one, is the First Home 5% Deposit Scheme. This allows you to buy a home with only a 5% deposit. And the best part is you don't pay any LMI. Besides those schemes, you have the Family Guarantor, and this means a family member, typically like your parents, can use the property's equity that they have as a security for your loan. What that means is potentially you can buy your next property with zero deposit. I've made a more in-depth video on this, so please check it out to see if you're eligible for these schemes. In short, by knowing exactly what you're comfortable paying each month and how much you can set aside upfront, you have a solid foundation guiding you for every decision. Otherwise, you may be swayed by the well-intentions of a lender or agency pushing you towards a bigger loan or property that you really can't afford. There's a saying, if you don't have a plan for your money, someone else will plan it for you. And trust me, you want to stay in the driver's seat. Once you locked in your targeted monthly payments and worked out the upfront costs, congratulations, you've just taken the most crucial step towards a smoother and more confident home buying journey. Next up, we'll clarify your why so that you never lose sight of what's really most important throughout this process. Step 2, know your why. Now you got a plan for your money. Let's talk about why you're buying a home in the first place, because this is one of the most important pieces in the puzzle. I like to compare home buying to dipping your toe in the river. You test the water's temperature, but you may not realize that there's a huge current beneath the surface that could sweep you away at any moment. That's exactly what happens to most people in the property market. They say, oh, I'm just starting looking for a few homes. And before they know it, they're in the whirlwind of listings, offers, and advice coming from every direction. If you're not crystal clear on why you're doing this, it's easy to get pulled downstream and end up somewhere you never intend to be. So please ask yourself this question. Is it necessary? Do you have a strict deadline, like you have to relocate for work or need more space for a growing family? If so, that's driving your why. Or can it be more optional? Maybe you're just tired of renting and want the stability of owning your own home, but there's no urgent timeline. In that case, you don't have to rush into a deal you don't feel comfortable with. You can step back if the market gets too hot or if there's nothing there that meets your criteria. Being honest about whether it's a must buy now or I would love to buy soon keeps you from slipping into deals that feel wrong. It also helps you know when to walk away without feeling pressured. Now, here's a tip that I tell all my customers to have. Head over to Google Drive and create a free Google Drive folder. Call it My Home Buying Plan. Whenever you see the mention of the Google Drive icon in future steps, that's your cue to add in the new information to that folder. We want all your information in one place because you're going to refer to it a lot throughout this whole process. When you're clear on your why, you don't feel like you're being distracted by the flashy listings or advice that really doesn't align with your real needs. Instead, you feel steady and confident, like you're moving with the current you choose. Step 3, finding a lender. Now that we've nailed down why you're buying a home and done the homework on your budget, let's tackle the next big piece, finding a lender and getting that pre-approval. Many people jump right into house hunting and calling real estate agents, but there's no point in touring countless properties, making offers and getting attached to places if you later discover you can't even get a loan. That's why we want to talk to a lender or broker first, for 2 reasons. First thing is, they can confirm you can get a loan. You want to ensure that nothing is standing in your way financially. If there's any hidden credit issues or missing documents, it's much better to find out now before you fall in love with a house. And number 2, they will tell you what your maximum purchase price is. There's no point in looking at homes that are 600K if your upper limit is 500K. Pre-approval sets a clear boundary so you don't waste your time or emotional energy on places that are simply out of your range. Now, there are 3 main categories of lenders that you can work with. Number 1 is a mortgage broker. Number 2 is direct or online lender like CBA or Westpac. Number 3 is a local bank or credit union. So let's go through the first option, a mortgage broker. So a broker like myself, we shop around on your behalf. So we cover all the big banks and we also cover the smaller banks. Now we'll uncover deals or offers you might miss out on your own. For instance, a broker can access dozens of different banks to match your situation. Plus, we'll be able to guide you through the entire process to keep things easy for you. The second option you have is direct or online lenders. Larger institutions or online only lenders can have a streamlined process or special promotions offered. Just be sure to read the reviews and compare the rates. Some have very limited products, so make sure you do your homework or ask a family or friend who recently bought a home. Number 3 is a local bank or credit union. So these are community-focused lenders or credit unions that sometimes offer member benefits or competitive rates. Step 4, preparing documents and rate research. But before we dive into the numbers, here's one big tip that can save you tons of time during the whole process. Gather your documents first. Many people wait until the lender says, hey, can you send me your pay slips or bank statements, and then scramble around. If you can collect everything up front, you look like you're prepared. Now here's what you need to organize. The most important is you need 2 payslips, 2 most recent payslips. After that, you also need some bank statements showing your deposits and savings for the past 3 months. And also you need to show last 3 months worth of credit card or loan statements if relevant. Another thing you have to provide is any income or asset proof, like if you've got any shares or documents or investments, you need to provide evidence of that. Now, I like to stress this key habit before you apply. Please, no major purchase or new credit for at least 3 months before you apply. So that's avoiding the new car loans, payday loans, or any gambling transactions or afterpay. Another key thing is don't quit your job or switch industries during this process. If you do change jobs, stay in the same field with a full-time permanent role if possible. Another major tip is no late payments. Pay everything on time to preserve your credit score. Step 5, getting pre-approved. So once you've chosen your preferred option, broker, lender, or local bank, it's time to apply for the pre-approval. Now, why is this important? Well, a pre-approval would tell you the following. The first, it'll tell you your maximum purchase price. No more guessing how high you can go. It'll also tell you the government schemes and grants that you know that you will qualify for. It'll also cover the interest rate and costs. So you'll get a full quote covering the monthly payments, deposit types that you need, and also the lender fees and closing costs that you need to cover. Brokers usually provide multiple loan options, while banks only offer the in-house products. So sometimes it's best to compare. Another thing is confidence comes with the pre-approval. A pre-approval letter shows the seller you are serious and financially ready, so they take your application much more seriously. Now, in order to get a pre-approval, you need to do the following. You need to fill out an application form. So you need to fill out with your personal details. You need employment info, address for the past 2 years. You also need to put in your income details and your financial position, so your assets or your liabilities. They will also check your credit score, any bankruptcies or defaults. After you put in the application for pre-approval, it usually takes a couple of days for the lender to assess your file. And if they need any more documents, they will ask. So be patient and be willing to work with the lender to get you over the line. Once they're satisfied, they'll issue a pre-approval, which normally lasts for about 90 days. And it can be renewed for another 90 days afterwards. Now, a key thing on credit scores, lenders will run a credit check, which can slightly reduce your score at the moment. A broker, like myself, might have the option to view your credit report without impacting, so we can see your score. And this helps us determine which lenders are the best ones for your situation. Now, generally speaking, anything under 650 score might be an instant decline by many banks. A score between 650 to 750 is average, 750 and 900 is good, and 900 plus is very good. If your score is below that 650, don't stress too much. There are some lenders that completely will ignore the credit scores and will still offer you a loan. Ideally, for a better rate, you might want to get a better credit score, which I will cover in another video. Now, once you've been pre-approved, the lender will issue a pre-approval letter. Make sure you keep that safe. So put that in that Google Drive we mentioned in the beginning, because the real estate agent will want to ask whether you've been pre-approved. And if you are, it shows to them that you're a serious buyer. At this point, you know your price range, your likely monthly payment, and you have all your documents in place. The next step is we got to start finding you a property. And trust me, it's so much more fun to look at homes once you have your finance all sorted out, rather than crossing your fingers and window shopping. Step 6, finding a property. So you've got your budget set and you've got your pre-approval all sorted out. Here comes the most fun part, finding a property. But it can be also overwhelming if you're not careful, because the markets can move very fast. And if you're not clear on exactly what you need and what are your wants, you can be pulled in every direction. So let's talk about the strategy. Clarify your absolute needs versus your wants. Ask yourself, what do I absolutely need to live comfortably? Maybe a certain number of bedrooms, a specific commute time, or a safe backyard for the dog. Then list your nice to haves, like a pool or a huge master suite. Write this down, maybe in the same Google Drive folder we mentioned before. That way, if the market's current picks up and multiple offers rush in, you won't be swept away by something that really doesn't fit your must-haves. Now, a key tip is please be cautious of homes near power lines or any homes that have like major structural issues. The reason is lenders might have very strict requirements and they might refuse to give you a loan on these homes. Now, here's another thing that I noticed. Whenever you see a home, sometimes it can be listed on Monday and has multiple offers by Wednesday. If you're not mentally ready, you might feel pressured to make a snap decision. Always circle back to your why and your budget. If there's no urgency, don't FOMO into buying a home that only meets half your requirements. Another key tip is please don't get overly attached to a home. It's natural to picture yourself in the dream kitchen or relaxing on that cozy deck, but let's try not to fall in love until you've checked all the details. Deals can fall apart, inspections might reveal big issues with the home. Keep some emotional distance until things are more certain. Another crucial tip I like to mention is don't waste your time seeing every single listing. Scheduling 20 showings in one day often means you're unclear on your budget or your must-haves. This just drains your energy and time. You got to filter homes online by the location, price, and your non-negotiables. If something doesn't obviously fit it, skip it. Focus on a handful of strong contenders that truly match your needs. So that's why we recommend leveraging online apps like Domain and realestate.com. But your agent might have some off-market listings or early alerts, so make sure you stay ahead on both platforms. Now, if you're looking to buy a unit, please keep this in mind. Banks have much more stricter restrictions on what postcodes they lend to. So you need to first check with your lender or bank before making an offer on a property. The bottom line is finding a home should be exciting, but it quickly becomes stressful if you're unprepared. Stay grounded in your needs versus your wants. And remember your why. When something genuinely fits your must-have and you trust your budget, you'll be ready to move without second-guessing yourself. Next, we'll tackle writing an offer or handling auctions so you can secure the perfect place without being swept away by the current. Step 7, writing your offer and dealing with auctions. Now that you find a property you love, it's time for step 7, writing your offer. Or if you're in certain parts of Australia, dealing with a property auction. Private offers, so these are non-auction deals. This is where you submit a written offer directly to the seller or their agent saying, I want to buy this home for X amount under these conditions. I always recommend to include at least 2 of these conditions below. Subject to finance clause. This protects you in case that the loan approval doesn't go ahead. The second clause I always recommend is a building pest clause. This lets you withdraw if the house has serious defects. Remember, the seller might counter offer, adjust the price or settlement date or any other terms. If you agree, it becomes a legally binding contract, so make sure you understand every detail. It's the blueprint for how, when, and under what conditions you buy. When making a private offer, show genuine interest. Some buyers simply want a house, but then they lowball the seller by tens of thousands of dollars, only to get rejected. If you're serious, pick a price just below your absolute maximum for the home, but don't go so low that you offend the seller. Also, discuss with the agent how to make the offer more appealing, like a shorter contingency or faster settlement. This is how I was able to get one of my homes where I offered less than the other person, but I had a shorter settlement time than him. Now, another key thing is have your conveyancer review the contract for any unfavorable clauses. Another good tip to avoid overpaying for property is, let's say the property report says the range is between $650 to $750. Try not to go above the high end, because if the bank valuation comes in lower, you might have to make up the difference between that out of your pocket. In that case, you might have to ask your broker to start ordering multiple valuations from different banks to see if you can get a good valuation. Now, let's talk about my favorite one, auctions. If you're dealing with auction, the process is completely different. Typically, there's no cooling off period or finance or inspection clauses once the hammer falls. You need the full loan approval, inspections that have to be done beforehand, and you need a firm cap on what your maximum offer can be. Auctions can be emotional, like a roller coaster, so please keep calm. If the bidding goes beyond your comfort zone, walk away. It's better to lose one property than push yourself into financial stress. Before auction, have a conveyancer or solicitor check the contract. If something's unusual, fix it before the auction date. My auction strategy is open with a strong bid to show you're a serious buyer, but once you hit your upper limit, that's pretty much it. Auctions are whoever has the most money. Now, if you don't get the property, don't stress. Another property will always come along eventually. But debt stress can stay with you for years if you decide to overshoot. In both private offers and auctions, let the agent know you've been pre-approved, but don't reveal the exact loan amount. If they ask, just politely mention you're not comfortable sharing the specifics, but they can always confirm with the broker or lender if they need to. That way they know you can complete the purchase. Whether you're making a private offer or raising the paddle at the auction, stay calm. Stick to your budget and your conditions, and please always remember your why. Focus on what really matters, and you hopefully walk away with the keys. Next thing we're going to talk about is inspections and due diligence, so you don't get blindsided after your offer is accepted. Inspections are where you dive into the details, test every light switch, tap, appliances, and door. Every small problem can become major repairs later on. If you're serious, spend the $400 on a building inspection report, and this could save you thousands of dollars by revealing any hidden issues. For example, one property I bought had a roof problem that was uncovered by the building and pest report. Because of that problem, I was able to negotiate $10,000 off the sale price. Now, if you're looking to buy a unit, this is what I recommend to do instead. What you need to do is you need to look at the strata report and the special levy expense. These are like additional contributions that have to be made by the owners for unexpected repairs. So one of my clients in Glebe got hit with a $50K special levy for a structural fix. Huge bill. Another thing you need to look for is administration and sinking funds. A well-funded corporation is crucial. If the levies are too cheap, that often leads to surprise special levies later on. So another thing I like to do is a neighborhood check. So once the agent's gone, I normally like to knock on a few doors and introduce myself, tell them you're looking to buy a home there and ask them about the area, how it is. And they will tell you if there's any antisocial behavior or is there any massive issues in the area. Step 8, formal loan approval and valuation. After you and the seller sign the contract, bring it to the broker or lender for the final loan approval. The bank will confirm the property's value and ensure nothing is amiss through evaluation. If everything lines up with your pre-approval, there's no major changes that have occurred, they'll grant you that final approval. So sometimes the banks might ask you for some extra documents, like some updated pay slips. Be ready for that. Once it's all been approved, they'll issue your loan documents, which you need to read carefully, especially if this is your first time doing it. What you need to do is check the interest rate, monthly repayments, and any fees to ensure that they match your earlier quote that you received from the bank or lender. As part of the process of buying a home, you also need building insurance, which normally costs between 1 to 3K a year depending on the coverage. For units or townhouses, you need strata insurance, which is managed by the strata manager, which means no cost for you. Step 9, settlement preparation or pre-settlement inspection. Congratulations on making it this far. Settlement is the final step where you officially become a homeowner. Often, once all the paperwork is signed and the deal is finalized, the seller hands over the keys so you can move in right away. You can also do a pre-settlement inspection or a final walkthrough to make sure the property is in the condition you expected. No missing appliances or fresh damage. If something's off, your conveyancer or solicitor might hold back part of the payment until it's fixed. This is your last chance to confirm everything is as promised before you sign the final document. After you cross every T and dot every I, you'll get the green light that the property is yours. Sometimes you get the key straight away. Oftentimes this might be a short wait. Either way, settlement day is a massive day. It's the moment you can finally call yourself a homeowner. Aftercare. Once the excitement settles down, here's what you can expect after you get the keys. Your first mortgage repayment, usually due about 30 days from the settlement date. You'll normally get a welcome pack from the bank explaining who to pay to and how to pay it. Now, once you buy a property, you need to stay comfortable in your budget as a homeowner because there's always unexpected bills that might pop up. For example, a broken window or some routine maintenance that pops up. That's why you got to have a solid budget from the start, and this helps you manage these surprises. Another thing you need to cover is make sure you check your mortgage statements and insurance policy yearly. Don't hesitate to shop around for a better home loan or insurance deal. Me personally, I like to compare every 1 to 2 years, and you can always reach out to me and I can shop around for you if you don't want to do all the heavy lifting. Now, the final thing is you have to really enjoy this process of buying a home. It can be tough sometimes, but it can also be really fun. It's your space, your investment, and your chance to really settle into your place. If it gets overwhelming, remember a little organization and knowledge can go a long way. By watching a video like this, you're already ahead of the curve. Congratulations on making it all the way through. From deciding to buy, to planning your money, to settlement date and beyond. Now you can truly enjoy the place you call home, knowing you set yourself up for success in the long run. Thank you for watching this video. It took a long time to film, so please give it a like and subscribe. Here's to your amazing journey as a new homeowner.